They know many new traders are attracted to this niche. And remember, this is always the one caveat. I mean, you have, in theory, unlimited potential losses when you're shorting these stocks. So what are the roadblocks? What are the hassles? You know, what makes it, you say it's hard, what makes it hard?
Well, the main thing that makes it hard is finding shares to short. So if you want to buy a stock, you just buy the stock.
Yep.
It's easy. If
you want to, you could buy tomorrow, you could buy a 10,000th of a penny stock and nobody would stop you. Or you could buy a $1,000 stock, nobody would stop you. If you've got a brokerage account, you got money in there, they'll let you buy them.
Right. So. But if you want to short sell, you can't just short sell any stock. You need to borrow the shares from your broker, because that's what you're doing. You're borrowing the shares from someone who owns the stock and then selling them and then promising to buy them back in the future. So if your broker cannot borrow those shares from someone who owns the stock, then you can't short sell.
Yep.
So it's particularly with penny stocks, with microcap stocks, there are not very many shares out there. Like, let's say somebody's running a big stock promotion, insiders own 80% of the shares, and they're going to dump these shares into the stock promotion. There aren't very many shares out there owned by people in normal brokerage accounts that will let you borrow them.
Right.
So you need to find brokers that are going to give you a chance to borrow shares, and even, I need to back up a step. Brokers that will even let you short low-priced stocks.
That's the other issue, is you might even, some brokers, and many brokers want nothing to do with this. They're like, they don't even try and get you the borrows. So you might be one of those brokers. So.
Right. So most brokers actually won't let you short sell stocks that trade over the counter or OTC stocks, and most brokers, or a lot of retail brokers, won't let you short sell stocks that are under $1 per share, and that's what most promoted stocks are. They're, under $1 per share or $1 to $2 per share. And again, if you can't short it, then you can't profit from it. And the brokers that will let you borrow and short those shares, again, there's the issue of finding shares to short. So my main broker, if I want to just sort of short and hold a promoted stock, is Interactive Brokers. But I'm competing with probably 100 other people to short the same promoted stocks. So it's really a crapshoot to try is who gets the shares and whether I'll get them in time. And then there are other brokers, but you'll probably pay higher borrow fees.
And other fees. We've seen this in the last few years. And I partly blame our friend Tim Sykes, but a lot of these brokers have recognized this short niche as a profit center, and they've just been raising fees up because they know everybody wants to short these stocks. So now you run into the fact where if you find a broker that has the shares, they know they have a asset, and they really ratchet up the fees on them, which makes it very difficult to profit on them unless you get if you get a 50% drop, you're good, but you need these big drops to cover your fees. So
there was a stock a lot of us have been trading recently. I always forget the name. Maybe it was Discover Gold, but they changed the name. DC, a dog, child.
It's one of those weird tickers. Dog. I can never type it in right the first time. It's always weird, but anyway.
And so it's interesting. I wouldn't call it a promoted stock. Haven't seen any paid promotion on it. But it's essentially empty shell company. Some dude bought half the company for $200,000. And recently it's had a market cap of over $300 million because it ran from under a cent per share up to $1.80 per share.
Because they had like some CBD product or something, right? Or supposedly.
Well, that's going to come, but that's the guy's private company that hasn't even been merged into the public company yet. So it's the actual public company is still an empty shell, which is just insane to me. But one of the days, I think I paid 3 cents a share to be able to borrow the shares
to get the shares.
For one day. For one day, 3 cents a share on a $1.50 stock. So the stock had to drop a few percent just for me to make money.
Yep.
And then, it did have some good drop days, but that's an insane fee to pay. And that means you're starting out significantly in the red,
Right.
which is going to mess up your mind and make it more likely that you make a trade just to use those shares rather than being patient and waiting until the time is right. But yeah, there's more and more you'll see stocks like that. And then if I want to hold that short overnight, I'll pay, I think, 4 times that borrow fee at this one broker. And then there's another broker. So my other broker besides Interactive Brokers is Centerpoint Securities. They'll only take you if you have a bigger account. But there's a couple other brokers people use, Trade Zero. They started as an offshore broker. They have a US-based subsidiary now. I've heard some decent things about them. Cobra Trading. They've been around for a long time, well over a decade, but I think they'll charge you 7 times the intraday borrow fee if you hold overnight.
And you might say, well, geez, that's highway robbery, but they know that they're charging those fees. It's basically insurance for them because they know many new traders are attracted to this niche. And remember, this is always the one caveat. I mean, you have, in theory, unlimited potential losses when you're shorting these stocks. And they know people, most of the time, are only holding losers overnight. If you're green on a trade, you're going to cover before the close. So they know if you're holding overnight, you're probably upside down. So the odds of you getting squeezed out are higher. So if I was running these brokerages, I'd probably be charging more than 7x because I know there's a high likelihood it's going to get bad for these people.
Yeah, and that's the thing we always try to mention with short selling is you can lose more than your position. So
I joke when I'll joke on my Twitter account about people being down 300%, and they're like, "Well, you can't be down 300%." Well, you can if you got enough money in your account and you short $100 stock or a $100 position, and you can be down $300 on that thing. As long as you got enough money in your account. So
and actually. One stock I trade about or talk about, CHC Helicopter. At one point I was down 1,000%. The stock went.
That's some good bragging rights right there.
The stock went from 20 cents to $2 in 2 days. And the thing is, this was a real company, not like a promoted stock. But they were in bankruptcy, and the bankruptcy was almost over. So literally, it was a week away from the stock being just deleted, being zero. For whatever reason, the stock has a short squeeze. It was really illiquid. And then all I did is I held the position and prayed that I didn't get forced to cover.
That's the takeaway from it. Don't do that. That's the number one takeaway.
Absolutely.
Don't pray.
And of course, the thing is, it was okay for me. I can take that kind of risk because this was a tiny position.
Right.
It was a $2,000 position, I think. So, but at one point, I was down 20,000. Jeez. So don't do that. But this is the kind
that, my friends, is not, when we talk about risk management, that is not what we're talking about.
Yeah, that is absolutely horrible. And only because I was fundamentally sure of my position and there was a definite catalyst was I willing to hold that. Still, it could have ended very badly for me because another thing I haven't talked about is forced buy-ins.
Sure. Yep.
You borrow the shares to short sell. And what happens, now you don't know this because it all goes on in the broker's computer system, but what if the person you borrow the shares from sells those shares and they go to somebody who bought them in an IRA or a different broker that doesn't lend those shares out? In that case, the broker has to deliver those shares.
Yep.
If they cannot borrow shares from another person, they're going to call you or message you on the platform and say, hey, you've got a forced buy-in. You need to cover this by the end of the day. Or they'll just cover you and say, "Oh, sorry, you got a forced buy-in."
Yep. And you might, they might send an email or they might send it to your platform. Maybe you're on vacation or away or whatever, and you're just out of that position, and you could be down, 2,000%.
Yeah.
And get forced out. Yeah.
So even if you're 100% sure that you're right, you cannot guarantee that you're not going to be forced out of the position.
Yep.
There was a similar position I was in shorting a bankrupt company right before it actually went to zero. This was Peabody Energy, BTUUQ, a few years ago. And it was literally a week before it went to zero. I shorted at $1.50. I think it hit $4 on a short squeeze. And I got some forced buy-ins a couple days later, back at about $2 a share. And then luckily, it was only a small position that got forced buy-ins. I was able to hold most of my short. And then it dropped down to 70 cents, stopped trading, and then deleted.
Okay.
And I ended up making a nice profit. But if I had gotten a forced buy-in on my entire position at the top, that would have been a 200% loss.
Yeah.
Even though I was 100% absolutely right.
Right.
Thanks for watching our video. Be sure to comment below with any trading related question. We love answering your questions. Also, like and share with your friends, and be sure to subscribe to be notified as soon as our next video hits. And if you're looking to expand your trading knowledge, don't forget to check out all of our other videos, and be sure to click the trial below. Check out StocksToTrade. I think it is one of the best, most rapidly advancing softwares out there. Be sure to check out our trial.